Hey everybody, and welcome back to another video. This is how to invest, and this video will be on AT&T, ticker symbol T. They recently, as of yesterday, completed a merger with Discovery, or Discovery Plus, as you may know from the streaming service. And the deal went through for, I think it was 38 billion. So not too much of a percent of their market capitalization. You can see here they're 210 billion-dollar market capitalization, as we always say, is much more important than the stock price. If we want to look at a chart of AT&T, of where it's been in the past 5 years, it's kind of been these limit bounds between about $40 and $20, and it kind of just stuck within this box for over almost 2 decades. This is March 2002. December, and it really hasn't been able to break over 40 and reach the peaks back in the 99 bubble or 2001 bubble. So why is this? I will be getting into that in the video. One of the first reasons is their very, very high dividend payment that they give out here. If we look, they say they pay out a 6.45% dividend, which is enormous for any company that's paying out a dividend. If you are familiar with dividends, 3 is normally considered quite high and substantial. Dividends are often used as a way to reinvest in companies or reinvest into the market over a long period of time, and are a better savings account. So if you buy a company that owns a dividend, they will pay out that dividend once, maybe twice or 4 times a year quarterly. Quarterly is the most well accepted. Most companies pay out their dividends quarterly, so you'll get a quarter of the 6% each quarter. So if you put in $1,000, you would get 64.5 after the full year, but after 3 months, you would get a quarter of that. So a quarter of 64 would be, what, 16? So you would get $16 every 3 months. And this does not sound like a lot, but when you pull up the numbers of scale and really start putting in large amounts of money is where you can see vast amount of gains. So if you put in, say, $100,000, so 100 times 60 would be 60. I think 60,000 is when the numbers really start going up. So dividends really get the ball rolling, and is known for the snowflake effect. If we look here, there's an advertisement for Warren Buffett, who wrote a book called The Snowball, I think, dividend investing, and that is his favorite type of investing, and just being able to reinvest the company, and he really doesn't like investing in companies without it. Now, why do companies pay dividends? They pay dividends because they are at a certain point in their maturity where they have so much free cash flow, they don't know what to do with it. If you ever watch SpongeBob, and the Pretty Patties episode, where they go, "What? You have so much money, what did you end up doing with it?" Well, some of it we just started burning, and then we just started burying it, and then we just started giving it away. And literally, that's the last option, dividends. They are literally just giving away their money to the stockholders. And this may be confusing for newer investors. They say, why would they want to give away a lot of their earnings to the stockholders? Why are they placing such an importance on the stockholders? Well, the majority of the ownership of the stock is going to be people within the company. So if you think about it, the people within the company, especially the CEO, are going to have the most amount of stock. So they're going to be getting extremely lucrative dividend payouts every quarter if it's a dividend paying company. So what they can do with this, they can reinvest in the company if they so desire, or it's just cash that goes out to the individuals and they get to keep. And like I said, it's a long-term savings that pays out cash. And as if the stock increases over time, you get a nice capital gains along with the dividend payouts over time. So it's kind of a double whammy. And the third factor for why dividends are important is because they are taxed at the lowest rate. So if you they are not taxed as capital gains, they are taxed as a dividend. So I'm pretty sure even if you're in the highest tax bracket, you only pay 20% on your dividends, which is much, much, much lower than most states where you would have to pay income tax, such as where it'd be up to 60% if you're in the highest bracket. So they are a great way to kind of cut back on your taxes and a more stable savings account, in my opinion, because they are often higher than savings accounts, and you're able to get the capital appreciation of the stock over time if the company's fundamentals are improving. So if we look here, why were they so high and what is going to be happening with the dividend in the future? So it was at almost 6.5%, which I said is almost double a normally high dividend. And since this merger went through, they will be having to cut that dividend by 40% because dividends are all based off free cash flow and how much cash they have on hand and are able to essentially give away and be okay with not having. So they needed more cash to go through this deal and to go to the bottom line. So the dividend will be cut by about 40%. So 40% of 6.5 would be about 3.5%, which is still quite high, but a lot of people are only invested in AT&T for the dividend, including almost myself. I was looking to get it more into dividends because as a younger investor, I'm not quite focused on it just because they are not really what I need as a young person. Dividends are for more risk-off individuals who don't really need as much growth, but need just a steady source of income. Maybe they could live off of it in their older age. But as a younger individual, it is much, much more important about building wealth and being able to create much, much more wealth for me in the future. And then maybe in the future, I could start buying dividends. But since it was such a high percent, and I have been growing my income steadily and my net worth, I was thinking a dividend play would be good because I have not currently focused on any. I'm in a couple dividends, but they're low paying and they're not really my main bullish thesis on any of the companies. So I was thinking about buying it, but I am very, very glad I didn't after this deal went through. If we look here, the companies that AT&T already owns through Warner Companies, which is a deal that went through almost a decade ago, is HBO Max, Warner Brothers, HBO, TBS, TNT, True TV, CNN, and then it starts getting into the more obscure ones. Adult Swim, Cartoon Network. Some of these I've never heard of, like Rooster Teeth. They have Bleacher Report, CNN, Spanish. These are the brands that they currently own and is what driving a lot of their growth because other than the 5G play, their cell phone industry doesn't have much growth ahead of them. They are kind of a stagnant, and T-Mobile is really gaining a lot of traction, and of course Verizon has always been a long-term winner in the field. But this is what they just acquired with the Discovery deal, and honestly, most of these I've never even heard of. I mean, I've heard of Discovery Channel, heard of HGTV, TLC, Food Network, ID. I've never heard of Magnolia. I like Animal Planet. Heard of OWN. They have golf. But most of these, like if we get down in this, Eurosport, D-Sport, Discovery, Familia, some of these are Spanish, but Discovery History, Quest Red, the number ones, I haven't heard of most of these channels on Discovery, and they're paying $38 billion for this. And as a phone company, it doesn't really, like, a lot of people criticize them heavily for making the Time Warner acquisition, and they said that it was a bad deal. But apparently AT&T does not agree, and they doubled down and want more growth and wanted a streaming service because that is the big rage. But currently Netflix has uh, quite a stronghold. And a lot of people are saying, oh, it's getting very flooded. And Netflix still has quite the market share. I don't know it off the top of my head, but I would say over 50% of people who are streaming have a Netflix account. So I would assume that they have about 50% market share. That's just a rough estimate. But Netflix has the verb for streaming. A lot of people don't even say, "Oh, I'm going to be streaming. I'll just Netflix it." It has become so mainstream that I can't even picture people's lives without it. And Discovery Plus is getting very, very late to the game. I know HBO Max is one. I think they still have commercials, but they're just not even on the same wavelength. So I think AT&T is trying to join the party, but they are a little bit too late for the streaming services. I just don't know how much is really going to affect their growth, considering that they've been range bound for the past 2 decades. Will this push them up to maybe 40 short term? Maybe it has some positive growth ahead of it, but I don't see this becoming a double up, triple up. And for a young investor like myself, that's what I'm looking for. If a stock can't double up within at least, I say 3 years as my longest, double up, then I don't personally really want to invest in it. If it could personally maybe 10x in 5 years, then I will be more patient. But for a double up over maybe 5 years, this might take, because the fundamentals are just not there currently, and they are the most in debt company in the world. Um, I just don't see it. If we want to look at some of the statistics here, um, their PE, it is looking quite low, but just just not a fan of this stock because of most people were just in it for the dividend, including myself. And since they cut it, it doesn't really look too attractive from a growth point of view. And me, myself, being a younger person, I'm definitely looking for growth compared to dividends or cash flow. So this one will be a no buy for me. If you made it this far, thank you for watching and have a great day.